Welcome, welcome. Godric here, your stock market mentor, coming at you Thursday night, January 23rd, 2025. So tomorrow's in the house. Can you guys hear me? Someone told me my phone volume is messed up. I got to upgrade my phone to the new. You guys hear me okay? Appreciate you. Think you can hear me. Do I sound kind of clear or not really? I'm going to figure out how to do this computer one day. Right now it's on my phone. You just got me what you got me. Tonight we're going to... Well, by the way, welcome back. You know, TikTok was not banned. Maybe for a day. I told you Trump's going to do something. Now, I know the coins are back. The coins were turned off. I know they're back because I bought some coins earlier, so don't hold back on your coins. Throw some coins at me tonight. You know, make it rain if you like the information. Because why not? When I throw some coins, throw me a couple cranes, you know. All right, tonight we're going to go for probably about an hour. Talk about some stock market stocks tonight. I have a simple idea. I want to make it easier for you guys that are learning the market. 3 ways I'm going to teach you how to make money in the stock market. 3 simple ways. It's pretty duplicatable. You don't have to really learn that much. Well, maybe a little bit, but the 3 ways to make money. Write this down in your journals. 1, share growth. Okay? Share growth of stocks over time. Like 6-month chart, you get a nice 6-month chart like this, CHWY. One thing about I don't really care too much for Roaring Kitty, but one thing about Roaring Kitty is he's going to give us some stocks that are like very fairly valued that are going up. So Roaring Kitty gave us this CHWY stock. He gave us the GameStop before, you know, the movie and everything. So I think the stock was 30 when he recommended it. Now it's 38, just chugging along, going up. Look at this 6-month chart. You see this is an uptrend. Just like, take a mental picture. Uptrend. Going up over time. Not down. Going up. Making money. Share growth. Okay. Consequently, more efficient than the 6-month chart is probably like a 10-year chart. Can I do that? Let me show you what I mean. I'll show you some 6-month charts, and I'll show you some 10-month charts if my phone will work. Here we go. See what I mean? All right, so CHWY 6-month chart. Look at this. Roku, 6 months. You see how it's going up? Write it down. ROKU. Uptrend. A lot of peaks and valleys if you trade, but otherwise going up. Look at this. Hood. You guys know about Robin Hood. They got that Robin Hood Gold. A lot of new accounts. See the nice uptrend. Share growth. You grab a stock that has a good 6-month chart, also a 10-year chart. I'll get to that. But if it's a short-term trade, look at a 6-month chart. 6-month charts will tend to continue going up. So we got Robin Hood, we got Roku, HOOD, ROKU, CHWY. I'm just giving you these golden nuggets. Like, just write them down. You'll see them going up. Now, 10-year chart. Look at this. Palo Alto Networks. I mean, how do you lose money on this chart? Do you see what's happening? Do you see the trend? 10-year chart. NVIDIA. This is kind of more vertical, NVIDIA. Obviously, it takes time to build up like that, but it's still technically going up. NVIDIA. Share growth. Costco. Who hasn't went shopping at Costco? Got to fill your cart with these huge items. You can't get out of Costco with less than $400. Let's be real now. COST. I think they're going to break 1,000. If they already haven't hit 1,000, they're going to break 1,000. Oh, they did. I see a high of 1,010 right there. Never mind. And here is a 10-year chart. Chipotle. Chipotle is growing. CMG, write it down. These are share growth. So you're looking for nice trends, either short-term or long-term. You want to do a short-term trend, get a 6-month chart that's doing nice. You want a long-term trend, get a 10-year chart that's doing nice, or an all-time chart. Palantir on the 6th month is doing really nice. That's the Palantir. I'm going to show you also a cover call on this one, Palantir. Trump is going to use the military more, not less. So Palantir will be going up. By the way, the high on Palantir was 84, I think. So look for this to break the high and go higher. Write down PLTR. SBUX is a dividend. I'm going to tell you about dividends next. Okay, so share growth stocks. Stocks that are going up over time on a nice pattern, going from left to right. Trends are a thing. Trends tend to continue. And if you're doing a short-term trade, look at a 6-month chart you like. Doing a long-term trade, look at a 10-year chart. Those tend to keep going up. And yeah, just follow the trend. They say never fight the market. Never fight the trend. If you do, you'll be sorry. I will answer some questions tonight. And I will look up some stocks if you want me to look up your stock. Can I look at Google 1-year chart? Do you think it's cup and handle? Oh, user. Can you look at Google 1-year chart? Do I think it's cup and handle? I'm going to go to my computer for that. I will look at Google for you. By the way, you're talking about technical analysis. I wasn't going to do that tonight, but a cup and handle is probably the best technical pattern you could ever get in the stock, because a cup and handle is going to go up higher. I'm gonna do GOOGL. There's GOOG and GOOGL. Let me see. 6 month, no. The year. Oh, I see. You're looking at the year chart. Cup and handle. I see it. Okay, so Google does have sort of a cup and handle chart, but it's solidifying. In July, it was at 185. Okay, I'm just looking at the 1-year chart. In July it was at about 190, 185, and then it makes a nice little cup shape. Goes down in September to 150. Makes a nice little cup, and the handle, it goes like this, and then the handle's higher, 197, and then it starts doing, the left side of the cup is lower, the right side of the cup is higher, then the handle starts going higher, and that actually is technically indicative of a cup with a handle pattern. So I'm just going to say yes, because you don't see this like that often. I would like it to be more profound, because it's kind of choppy. But if this is a cup of the hand, it will break out probably well past 200, and so you can buy it here, and we'll see. Only time will tell. Let's say give it 2 months. So let's check back in January, in March, and if it broke out, then it'd probably go to 210, 220 pretty easy. Maybe like a nice 10% pop. Yeah, I would say it's a cup of the handle, but I would like it to be a little more, not so choppy. Best I can do. We'll have to wait and find out. Appreciate you. So I was showing you 3 ways to make money in the market. 1 is share growth. 2 is dividends, and 3 is cover calls. We'll get to the dividends in a second. But any questions on that? Oracle and Palantir were buys 3 years ago. You missed it. Tom, what's up, Tom? Well, I don't know about Oracle. I'm not doing Oracle tonight, but Palantir is to buy right now because it's about to break an all-time high 84. But if it goes higher to 90 to 100, you're not gonna like jump in on that. I think like some people are trying to like do stocks with like no risk, you know, and there's always risk in stocks. Like if you're looking to catch a trend, an upward trend, there's always gonna be a chance it's gonna come down, you know. Sometimes people like want to like take all the risk out of it, and it's like you're gonna eventually invest in nothing, you know. So yes, Palantir is a risk because it's a high PE, but it has a lot of volume. It's trending up, and I think it'll go higher. We'll see. I mean, if this chart is correct, it'll continue. We'll see. They're with risk. They say risk capital only. Questions. CME, Godric, appreciate you. Thank you, CME. There'll be a couple coins. I won't say no. By the way, you guys, get these likes up. Hit these likes up to 1,000 or so. I'm going to talk about 3 ways to make money tonight. 1, share growth. I already covered that. You look at 6-month charts for short-term trades. Look at 10-year charts for long-term trades. And look at this nice pattern going up. I just showed you how many stocks? About 4. Look, I'll let me review for people who just jumped in. CHWY, 6-month. Roku, 6-month, going up. Hood, 6-month, going up. Palo Alto, 10-year going up, long-term trend. NVIDIA, going to go higher. 10-year. Costco, 10-year going higher. Chipotle, a lot of room to grow, going higher. And Palantir is 6-month. And we're going to do dividends in a second. Questions? Okay, without further ado, let's just jump to dividends. Okay, now dividends are probably one of the best ways to make money in the market because if you're patient, if you do a long-term trade, over time it's just nice to get these dividends, which is just kind of like income. I think of it like income, like paychecks. Starbucks, take a look here, has 2.4% yield. That's per year. Not a lot, but it's enough to say a healthy dividend. And Starbucks stock, if you look at the all-time chart from 1992, it has a nice uptrend. So that's a success story. So I would buy this as a dividend stock and expect to get what? Share growth plus dividend. Now, when you retire, and I hope you guys all get to retire, let's say 70, 75, I mean, that's retirement age anyways. Ideally, you have at least $1 million, maybe $2 or $3 million, but $1 million at 22.49% gives you about 25K dividend a year. That's enough to supplement your Social Security. Let's do the math. Well, if it's 24K, that's $2,000 a month, right? You guys are worried about Social Security? Not gonna be enough. So load up on some dividend stocks. $1 million pays you, in Starbucks pays you $25,000 a year. 24.9 divided by 12. $2,075 a month. Because why not? Have a better plan? Okay, let's do another one, shall we? McDonald's. Who doesn't know about McDonald's? Look at this. I just want you to see this all-time chart back from the 80s so far. It goes more than that, but this shows the 80s. How do you lose money on this chart? Just like how? Unless you really got into the peak and then it dipped, you sold. You would just be, And then consider they're paying a dividend. Look at it, the same yield as Starbucks, 2.49%. So $25,000 per million, okay, a year. And hopefully you have $1 million or $2 million when you retire. If you don't, you better start saving. And then, what kind of share growth? If you, just got the dividends and share growth, what kind of money is that after, 10, 20, 30 years? That's why dividends are easy, doable, and probably one of the best strategies for people you don't got to do nothing. I just say, like, fall out of bed, get the dividend. You don't have to trade. You don't have to worry about the market corrections. I mean, when the stock dips, what? You just buy more lower. I mean, is McDonald's really gonna go out of business? Or is it be like, oh, McDonald's, man, they went broke, dude. Yeah, they just, people stop going there. I don't think so. I mean, they even got those healthy alternatives. They got the oatmeal. They're trying to be more healthy. They got like coffee. All right, so Starbucks, McDonald's, and what else? Look at this. I got another one for you. Pepsi. Now, again, look at this chart from 84. How do you lose money on this chart? You're looking for a success story. It's right here, Pepsi. Now, Pepsi, one thing I didn't tell you, but I'll tell you now. Pepsi, McDonald's, Starbucks, they're all consumables. They sell stuff people eat. People get anxious, they get hungry. Pepsi owns Frito-Lay, Cheetos, Doritos, Pepsi. Something that people consume in mass quantities. And that's why probably they make a lot of money. That's why they're a good dividend stock and it's going up. So share growth and dividend. Why not have both? Write it down, PEP. And then the last dividend stock, Philip Morris. People are going to smoke. And even though people are smoking less in the U.S., this is the world market, by the way, PM. People are smoking more in the world market. That's not going down. So, look at this dividend. 4.3%, even better. So, for $1 million, this is paying $43,000 a year. Let's do the math. 43,100 divided by 12. $3,591 a month in Philip Morris. Why not have some nice supplement for Social Security? Because otherwise you'd be working at Walmart after you retire. Is that what you want? I just had to say it. I'm sorry. No, I know that's bad, but I mean, I'm not going to stop you if you want to work after you retire. All right, let me just see if anybody has questions. Is that too much? Before I get to the third way, cover calls, I want to see if anybody has any real questions. How do you feel about Palantir? Up next, how do I feel about Palantir? Palantir is going up. I just showed you a nice chart going up. I think they do like counterterrorism. So Trump's going to definitely use them for the next 4 years. And I think they're hot to try. I think they're going to go up. Probably break $100. It was 80. It was about to hit 80. And the high is 84, and then probably hit 100 before we have a nice pullback. And we will have a pullback, so don't trip. When it pulls back, you can buy. If you're trading, you can swing up. If it swings up, you can sell. Questions? All right, without ticker symbol, LYB is an amazing stock. Check it. Adolfo, LYB. Okay, why not? It sounds familiar. LYB. Lyondell Base Industries. LYB, NYSE. $77. Why is it going down? Is that dividend stock? 3.7 million volume. Has a volume. Chemicals. They do chemicals. Hang on, let me see if I can get this to play.
To view or update your streaming quote settings, go to my...
It's not gonna play, is it? Lyondell Base Industries, NV, operates as a chemical company in the United States, Germany, Mexico, Italy, Poland, France, Japan, China, Netherlands, etc., etc. Okay, everywhere. Refining and technology, it produces and markets olefins and co-products, polyethylene and polyethylene oxide and derivatives, ox fuels related to products, intermediate chemicals. For what? Solutions, compounds, engineering, plastics, master batches, engineered. Services, food, packaging, home furnishings, automotive components, and paints and coatings applications. Okay, that's what they do. Okay, and $77.85 per share, so it has a nice healthy share price. 3.7 million volume, I like that. It looks like a dividend stock. It doesn't go up much. It starts about $82 5 years ago, and it's about the same price today. And so it has a 5-year chart. That's good, but it's not going up. So I wonder why. Maybe it has a dividend. Yes, annual dividend 6.95%. Let me tell you guys something. For dividend stocks, if a dividend stock is paying 6% or 7% return a year yield, which is this LYB is paying, it doesn't have to have share growth. So yes, so I would say this is a good dividend stock. It's paying 6.95%. Check the dividends and see if they increase year to year. Because I know what Philip Morris does and what other stocks do. They increase the dividend to keep up with inflation and to give you a raise every year. Also, like Johnson & Johnson, one of the all-time great dividend stocks, it always increases the dividend and never cuts, never slashes the dividend. So make sure that your stock is not slashing the dividend or cutting it, but make sure it's paying more and more. Even if it's only like a 10-cent raise or $1 raise a year, it's good. They do come. Let me see if I have a PE. The last 4 earnings are beat, and miss. PE 11. Yeah, they have a good PE. So this is a really fairly valued company. Maybe kind of a little boring, but they have a great dividend and they have a good volume. So, yeah, I give it the green light. Question: what exactly is the point of investing in stocks? It's more of a long-term investment and earnings ROI. Dude with no name. You should fix that, by the way. Yeah, well, not exactly. And let me show you the third method of investing in stocks. That's not share growth. That's not dividends. That's what? Cover call writing. And I'll explain to you why that is not correct. That's not true. You can get money, every month in stocks. I'm going to show you now. Get your journal. Write this down. This is the magic of this whole presentation. We're going to wrap up in a little bit. Appreciate you guys. Thank you for the likes. Don't be some coins. I know the coins are working. Don't hold back on the coins. Make it rain. Come on now. I'm going to show you guys who are listening why you can make or how you can make monthly income on stocks. This is the third way. Cover call writing. Okay, write it down. Now, how about Rigetti? Rigetti's a hot stock. It has a quantum computer industry stock, and Rigetti RGTI. This one's kind of volatile. It's up and down, but it's one of these hot to trot stocks that are quantum computers. And why do I bring this up? Because look, it's $13, $13.47, so it's pretty inexpensive, and you can do a cover call on it. So spend $1,300, buy 100 shares, and I'm showing you. Click on options and go to February, which is 1 month away, 28 days. It's February 21st, 28 days. And you pull up the option chain, and it looks like this. Ta-da! Right side puts, left side calls. We're doing calls today. Okay, so you buy the stock here at $13.47, let's say tomorrow. Write the cover call 1 month out, and you give yourself some share growth, let's say 15, which is 1.5 higher. So you agree to sell the stock for 1.5 higher. For that, you're going to get a premium. Look at this. It says $1.90 by 205. So you get paid $1.90 every share for doing the cover call just for 1 month, less than a month actually, even better, which is $190 for 100 shares. So I say, show me $1,300, I'll show you $109 a month. And let's do the math. 1.9, which is 190, divided by your investment of 13.47 equals 14.1% return every month. 14.10 return every month on Rigetti RGTI CC cover call, and this is stock is 1347, and the strike on the right is 15. Give it some share growth. That way you get share growth and premium. You do this every month on the month, and you end up doing 10 cover calls a year and make 140% return, which is more than double your money in a year. Now, what's the challenge? The challenge is keeping with your stock, because the stock went down to $5, like when Quantum took a hit. Now it's coming back up. So you have to wait for the right time to do the cover call. You don't do it when it dips. Do it when it swings up. That's why I say 10 a year, not necessarily 12. You can write 12 cover calls, but you want to use timing. Write this down. Timing is to say that a trader waits for the right time to trade. And when the stock swings up, we have an up day, is when you want to write your cover call, because you get more money because the stock is up. The call options are up. Call options are paying more, and you're getting paid by those call options. So that's my recommendation, and that's like a monthly trade you can do. Anybody can do it. Anybody who has a level 2 trading, need a margin account. Open your stock market account at Schwab if you don't know where. Put some money in there. Start doing these cover calls for monthly income. The biggest challenge is going to be keeping with the shares as they go up and down, and ideally writing the cover call. You can write the cover call anytime, but ideally you write it when the stock is swinging up, not down. Okay? Let's look at another one. Now, you can't just do cover calls with any stock, because some stocks aren't really good for cover calls. I like doing the ones that are volatile, like Rocket Labs. Yeah, this one also is going up. 3157. RKLB. 3157. Now, this one went up a lot last week, but if you're not afraid to buy the shares when they're going higher, or when they're breaking new highs, which I'm not afraid to do that, you're looking at a nice cover call return. Buy the shares here at 3157, and let's say you write the 30, 31, 32, 33. How about the 34? So you write the 34 strike for $2.45. Where Palantir is paying $190 per share, this is paying $245 per share, or $245 per share, per 100 shares. Let's do the math. 245 divided by 3157 equals 7.7% return. Half the return of Rigetti, but I'll tell you, it doesn't have the roller coaster ride Rigetti has. So it's probably, this one might even be better for you. Anyways, show me $3,000, 3,100. I'll show you $245 a month on the cover call right here, Rocket Labs. Okay. All right. Should we do another one? I think I have one more for you. There's Palantir. Yeah. Okay, Palantir. Again, you click on options. There's a chart, news, and options. Then you go to the option chain. You go 1 month out. If it's January, you write February. If it's February, you write March. And here's the option chain. By the way, look at that volume, 55 million. Market cap, 179 billion. All right. So here the shares are closer to $80, $78.98 today. Palantir, cover call, each month, $78.98. Even by the time you buy it, even if it's $80, it's still, I think, a good deal. So you can go to 100, I think. All right, so I would give some share growth maybe to 84, 4 points. And you're getting share growth plus premium, 485 for writing the 84 strike. So buy the shares here is $78.98. Let's say $79, close enough. Write the 84 cover call, which is 5 points, and get 485 per share, or $485 per 100 shares. Show me $8,000, and I'll show you $485 a month every month on the cover call. So no, stocks aren't just for long-term nothing. This is a strategy to make monthly income. If you can just stay with this stock, stay with the roller coaster ride, you can master this strategy. It's not easy. I make it sound easy. It's not easy, but it's doable. You want to try it? Questions? I'm swinging calls for Sophie before close tomorrow. Bad idea. Boba. SoFi. I don't have that stock. I can look it up if you want. See, look, you're buying calls, right? You're hoping that the stock goes up, right? If you're selling the cover call, the stock doesn't have to go up. Like you guys have to look at what is the chance your trade's going to be successful. That's important. If you're looking at having success in trading, look at high chance of success. These cover calls have a high chance of success because you're getting the money up front. You can spend the money, use the money, reinvest the money. The only thing you have to worry about is the shares. You have exposure to the shares. The shares can come down, right? Let's say by PLTR at 79, it goes down to 70. Well, you lost 9 points of share growth and $900. But look, you're getting almost 500, 485 per month for the cover call. So if it goes down 9 points, you just count how long it's going to take you to come out of that hole. 2 months of cover calls, and you're back to even. And then the rest of the year, here's the thing: it's not going to go down every month. Not with that kind of trend. Look, if you vet your stocks properly, get a nice 6-month trend, it's probably not going to go down every month because the trend is going up. So this is why it's a candidate, I think, for cover calls. And even if it's down a few months, let's say it's down 4 months, right? So it takes 4 months to come back, and then the rest of the time, it's just profit. So you probably won't get the full return. Even if you got half the return, you're still getting returns, still getting income. Let's do the math on that, shall we? 485 income, $485 a month divided by $79 share price, 6.1% return on PLTR, 6.1, and that's 61% per year, which is a great return. By the second year, you're doubling your money. And I wrote the 84 because I want to show you guys this stock can really move. I'm gonna get you guys 5 points of share growth, and I believe that also 5 points of premium almost. You can write the 80 for 640, but honestly, like, to have exposure to that downside is not really worth it to only get no exposure to the upside. That's why you want to get share growth and premium. Write it down. And that's the best combination. That's why I do that. Question. So we did 3 ways to make money in the stocks. Share growth, 6 month or 10-year, short-term versus long-term. We did dividends, which is the easiest strategy, honestly. Starbucks, Philip Morris, McDonald's, Pepsi. And now we're doing cover calls, Palantir, Rocket Labs, Rigetti. Questions? Rigetti by stock is going to 70 this year. Norbert 93. Rigetti's going to 70. Yeah, probably. I also have another stock, IONQ, and I was telling my group that's probably going to 100. And that one's 40 right now. So Rigetti could definitely also go to 100. Because why? Because it's hot. Like quantum computers. I tell this philosophy about a burning match, where stocks are a lot like a burning match. A match catches on fire, it burns, and then it goes out. Like, if you guys know, like, if a stock is hot, it's going to go up. It's going to be hot. Volume, uptrends, burning match. So you want to get to that stock while it's going up, while it's hot. And if the match burns out, if the company doesn't produce anything exciting anymore, that'll burn out, and then it'll come back down and it'll probably be boring again. Like, you guys know that Blockbuster went out of business. Blockbuster has been so great for so long, And then what? They went out of business. Got replaced by like Netflix, for example. America Online. We have to remember back in the day, we're going internet. We have email. America Online was the top stock. It was just going crazy. And then what happened? It went all the way up and then it burned out. Yahoo was going crazy. It went up like 800 points. And eventually it burned out. So the birdie match. Look at the trend. Look at what's hot. If your stock is having problems because you're getting replaced, then it might be time to move on. There's something's happening too with Disney. Disney, you know, like old brick and mortar. They have Disneyland. They have Disney World. They have movies. But it's an older company. They have so many employees. They're paying all this, you know, payroll and benefits, all these employees. But they're being replaced by, they were upseated by Netflix for the #1 entertainment company. And Netflix is just a real simple, I think, more elegant platform because they stream everything right to your living room. There's no Disneyland. There's no to worry about. There's no these clunky properties, you know, and that's probably why they're doing better. That's probably why Disney better catch on and do better on its stream platform. Otherwise, it's going to be replaced. The movie theaters are being replaced. You know, think of the past. Am I right? All right, guys. I think I gave you the golden nuggets tonight. Any questions before we wrap up? I can only scroll back so far. What exactly is the point? I read that one already. Let your XRP coin grow, guys. Go to sleep. XRP. I don't do crypto, but hey, do crypto. I cover Palantir. I appreciate you guys. I'm definitely going to be back Monday. You guys don't want to send me questions, one question at a time. And if you subscribe, you can come up here if you want. Talk about stuff, ask me questions. You want to come up here tomorrow? You're subbing. Subs can come up if they want. And if you sub, I'll take care of you first. You know, you subs know I'll take care of you first, you know. About to wrap up. Any final questions? All right, guys, there you have it. 3 ways to make money. Share growth, dividends, cover calls. Give you the golden nuggets, write notes, send me your questions. Godric out.